Are you ready to start investing but feeling overwhelmed? If you would have invested in Tesla like 10 years ago or even Microsoft way back, you would have been a millionaire. So, big stories about people making tons of money. Seems nice, right? Have you missed the boat? Of course not. Investing offers more opportunities. In this video, we'll reveal the 8 crucial things you must know before diving into the world of investments. Don't miss out on these essential tips that could save you time, money, and stress. So, grab a pen and paper and let's dive in. Step 1. Understand the basics of the stock market. Delving into the realm of stock market investments requires a foundational understanding of its fundamental mechanics. The stock market serves as a dynamic platform where publicly traded companies offer shares of their ownership to the public. This process allows investors to become partial owners of these companies when they purchase stocks. In essence, buying a stock signifies acquiring a small stake in the ownership of that particular company. The fluctuation in the value of the stock is intricately tied to the performance of the company and the prevailing conditions in the overall market. Equipping yourself with knowledge about the various types of stocks is equally crucial. Common and preferred stocks represent distinct ownership structures, each with its own set of characteristics and implications for investors. Common stocks typically offer voting rights and potential dividends, while preferred stocks often come with priority claims to company assets, but may lack voting rights. Understanding these nuances is paramount in tailoring your investment strategy to align with your financial goals. Moreover, comprehending the inherent risks associated with different types of stocks is vital. Factors such as market volatility, economic conditions, and company-specific risks contribute to the dynamic nature of stock investments. By grasping these basics, investors can make informed decisions, navigate the complexities of the stock market, and cultivate a resilient investment portfolio. Step 2. Determine your investment goals and risk tolerance. Before you start investing, it's important to determine these 2 aspects. First, define your investment goals. These can be short-term or long-term. Clearly identify whether your investment goals are short-term. For example, are you investing such as saving for a vacation or down payment, or for the long term, such as retirement planning? This will influence your investment horizon and risk tolerance. Then there is something called specificity and quantifiability. Make your goals specific and measurable. Instead of a vague goal like saving for the future, set a target amount or percentage return you want to achieve. This helps in crafting a more focused investment plan. Second, assess your risk tolerance. Use risk tolerance questionnaires. Many financial institutions and online platforms offer these questionnaires. These surveys typically ask about your financial situation, investment experience, and how you would react to different market scenarios. The results provide an estimate of your risk tolerance level. Have some self-reflection. Consider your own emotional response to financial ups and downs. If market fluctuations make you nervous, you may have a lower risk tolerance. On the other hand, if you can handle short-term volatility for potential long-term gains, your risk tolerance may be higher. A general rule of thumb between age and investment horizon. Younger investors with a longer time horizon can afford to take more risks, as they have more time to recover from market downturns. Older investors, especially those nearing retirement, may prefer a more conservative approach to protect their capital. Step 3. Do your research. Embarking on the journey of investing requires thorough research to make well-informed decisions aligned with your financial goals and risk tolerance. Beyond establishing your investment objectives and risk appetite, delving into comprehensive research becomes imperative. Begin by scrutinizing individual companies, aiming to identify those with robust financial standings, a competitive edge in their industry, and a track record of consistent growth. Analyzing financial statements can provide valuable insights into a company's fiscal health, including its revenue, expenses, and profitability. Complement this with exploring broader market trends, as understanding the economic landscape is vital for making strategic investment choices. Utilize a range of tools to enhance your research process. Financial statements offer a quantitative overview, while analyst reports provide expert insights into a company's potential trajectory. Stock screeners can assist in filtering investment options based on specific criteria, streamlining the selection process. Remember that a well-rounded approach involves considering both quantitative and qualitative factors. Embrace a holistic view of the market, evaluating not only the numbers, but also the competitive landscape and potential for future growth. Informed research equips you with the knowledge needed to navigate the complexities of the financial markets and build a resilient investment portfolio. Step 4. Open a brokerage account. Following your diligent research, the subsequent crucial step in embarking on your investment journey is to open a brokerage account. In the vast landscape of financial services, a multitude of brokerage firms and apps beckon, underscoring the importance of thorough research to pinpoint the one that aligns seamlessly with your specific requirements. When selecting a platform, prioritize those that offer low fees, ensuring cost-effectiveness in your transactions. A user-friendly interface is equally pivotal, streamlining your experience and enabling easy navigation through the complexities of stock trading. Diversity in investment options is another pivotal criterion for consideration. Opt for platforms that provide a broad spectrum of investment choices, empowering you to tailor your portfolio to match your strategic goals. This careful selection process is the cornerstone for executing your investment strategy effectively, creating an environment conducive to seamless trading experiences and maximizing your potential for financial growth. Your chosen brokerage account becomes the conduit through which you actualize your investment goals. By laying a robust foundation with a well-researched and compatible platform, you set the stage for a rewarding and efficient investment journey, where strategic decisions are executed seamlessly and your financial potential is optimized. Step 5. Start investing. Congratulations on reaching the exciting milestone of commencing your investment journey. As you gear up to purchase your inaugural stock, prioritize investing an amount that not only resonates with your financial comfort, but also harmonizes with your predefined investment objectives and risk tolerance. Strategic investing involves a balance between ambition and prudence, ensuring that your financial decisions are in sync with your overarching goals. Diversification emerges as a crucial principle in constructing a resilient portfolio. Spread your investments across various stocks representing different industries, avoiding the pitfall of concentrating all your assets in a single avenue. This wise approach is encapsulated in the adage, "Don't put all your eggs in one basket." Diversifying your portfolio helps mitigate risk by reducing the impact of poor performance in a particular sector. Remember that the market is dynamic, and having a diversified portfolio acts as a safeguard against potential fluctuations. By embracing variety in your investments, you enhance the likelihood of offsetting losses with gains, fostering long-term stability and growth. As you embark on this investment journey, keep a keen eye on your goals, stay attuned to market trends, and maintain a balanced, diversified portfolio for a more resilient and rewarding experience. Step 6. Monitor your investments. After making your initial investments in stocks, vigilance becomes key to a successful investment journey. Regularly monitor your investments by staying abreast of company news and market trends. This ongoing scrutiny empowers you to make informed decisions based on the evolving landscape of your investments. Be attentive to the performance of the companies in your portfolio and adjust your strategy as needed. It's crucial to maintain a long-term perspective when investing in stocks. While short-term fluctuations may occur, avoid getting overly preoccupied with these momentary shifts. Keep your focus on the overarching goals and fundamentals of your investments. This approach allows you to weather the inevitable market ups and downs, benefiting from the potential growth and stability that a long-term investment strategy can offer. In the dynamic world of stocks, a patient and informed mindset serves as a foundation for sustained success. Step 7. Stay disciplined. Maintaining discipline is a cornerstone of successful investing. Once you've devised a sound investment strategy, it's paramount to adhere to it steadfastly and resist emotional reactions to short-term market fluctuations. The ebb and flow of the market are inevitable, and succumbing to impulsive decisions can undermine your long-term financial objectives. Reinforce the understanding that investing in stocks is a marathon, not a sprint. Patience is a virtue in this realm, and trust in the process is integral to navigating the fluctuations of the market. Regularly reassess your investments over the years to ensure they align with your initial strategy. This periodic evaluation allows you to make informed adjustments based on changing circumstances while staying true to your overarching financial goals. By cultivating discipline, patience, and a strategic mindset, you position yourself for sustained success in the dynamic landscape of stock investments. Step 8. Continuously educate yourself. In the ever-evolving landscape of the stock market, a commitment to continuous education is paramount. Given the dynamic nature of financial markets, staying informed about emerging trends and evolving investment strategies is essential for making informed decisions. Engage in a proactive learning approach by delving into books, attending seminars, and closely following financial news sources. These resources provide valuable insights into the nuances of the stock market, helping you stay abreast of the latest developments. Books written by seasoned investors and financial experts can offer in-depth knowledge and practical wisdom, contributing to your understanding of market dynamics. Seminars and workshops provide opportunities to interact with industry professionals, gaining real-time perspectives on market trends and strategies. Regularly following financial news, whether through reputable publications or online platforms, ensures you are well informed about current events and their potential impact on the market. By embracing a commitment to ongoing education, you empower yourself to navigate the complexities of the stock market with confidence and adaptability. And there you have it, folks. My Ultimate Starter's Guide to Investing in Stocks. Remember, investing in stocks can be a great way to build wealth, but it's important to do your research, determine your strategy, and stick to it. Thanks for watching and happy investing.